Good morning, traders. It is Friday, March 7th, and we've got the markets trying to hold their value here. If we take a look at the futures chart of the SP 500, we can see here yesterday the market continued to move down, and today it is really trying to figure out what it is going to do. Overall, there's a lot of fear this week. The close today on a Friday, these are kind of one of the days that I kind of really like to watch. Weekly close is a very strong chart. The weekly chart is a very strong pattern to follow. And there's fear all week, lots of volume, and the markets are trading down near the lows of the week. And the question will be, is there a short squeeze into the closing bell, or a short squeeze today where shorts cover and the market rebounds, or does everybody really just give in and give up and literally dump shares before the weekend and say, like, I'm out. It never recovered for the week. I'm out. So we need to see which momentum, which way this market wants to go. Now, if we do look at the short-term charts here, the 30-minute chart, obviously, we've had these bouts of FOMO where the market, for some reason, traders, investors kind of pile in thinking the market's put in a bottom, and they think it's changed momentum, and usually the market goes the opposite way of the general public. And then we have these panic selling waves where the market, everybody's expecting the markets to fall. They're selling their shares, expecting it to go down. And then, of course, it rebounds. We had another panic wave here. And yesterday we had a panic wave right into the closing bell as well. It closed at 5, which is a fairly significant level. That usually signals a market's going to want to try to bounce. So we'll see how that unfolds now. We went from this overbought territory yesterday, or this FOMO level more so, and the market sold off. It had a big gap down and sold off through the day. Today we have panic selling, and the VIX is up. The put-call ratio was fairly high yesterday. People betting on falling pricing. We'll probably see the market be flat or positive is my thinking for the day. But it is a Friday, and it's going to be interesting to see what big institutions do into the closing bell. They say big money likes to get it, move positions at the close. So there's a lot of volume there. But you can see here just this morning alone, we're just starting to see economic data is coming out. We're just starting to see the market have a little bit of a pop, which coincides with what we're expecting based on short-term sentiment of people moving in and from there. So on another note, I am doing a multi-week fasting where I really don't eat for 5 days, just water and vitamins, and then I refeed for 2 days, high fat, high protein. And so this is the breakfast that I cooked this morning. I don't know if anybody's done a 7-day cleanse or longer, multiple of these where you cleanse for 5 or 7 days and refeed and repeat until you kind of reach the level you want to fat-wise and health-wise. But it feels amazing. I'm 7 days of cleansing, of fasting, and I'm just having my first meal. This is the steak I cooked this morning at 6 o'clock in the morning. I did some garlic butter shrimp for extra protein. And I did a couple eggs for more protein, and avocados and sauerkraut. So anyways, that's what I had this morning. If anybody's done these cleanses, I'd love to get some feedback. This is the first time I've done it. I feel like $1,000,000, crystal clear clarity, energy. I just absolutely love it. So I'd love to get some feedback from anybody who is doing this. And I'm planning to do this multiple weeks and get nice and lean, and then hit the gym for some muscle building after that. Anyways, what else do we have going on? We've got bonds. Bonds are trading. They're starting to move down a little bit with economic data. They've been pulling back over the last little bit. They have dipped into an oversold territory to the 20-day moving average, and we'll see how it goes from there. But overall, bonds on a short-term basis are moving up. But in the grand scheme of things, when we look at the long-term picture of bonds, it is clearly still in a downtrend. At best case scenario, it is really trading, in a stage 1 sideways base, trying to figure out, trying to build a base for it to start the next bull market phase where we're in a falling rate environment. But that might take a lot longer than a lot of people think, and it's best just to ignore an asset class until it's actually in a stage. Stage 2s and stage 4s are the primary money-making stages. Stage 1s and stage 3s, which bonds are in a stage 1, the stock market is in a stage 3. They're difficult, and they're kind of a painful grind. And it's about, you never know when the bottom is going to fall out in a stage 3 when that final trend has changed, and you definitely don't want to be on the wrong side of that. And that's why we have to manage our positions. And that's why we do have to get in and out throughout the year, because you never know which one is the one that can wipe out your account. And that could take 5, 10, 15 years to come back, like the NASDAQ did after the tech bubble. So that's kind of the view we have to take on things. And let's take a look at some other assets here. We have the dollar. The dollar is pushing down a little bit more again, down a 1/3% today. We do have gold down and silver down a little bit, although gold and silver, I think, had a bit of a washout low here, and now I think they're trying to firm up. They have had a very nice run, and we might see a little bit of a consolidation. I do think we could still see this push up to about that 3,050, 3,060 level as the next kind of upside target. From there, it could get into a bigger consolidation and pause a little bit more. Miners, I think we talked about miners yesterday. I don't quite recall, but yeah, I think we did. So miners have that bullish bias, a nice strong impulse move, a first key pullback, and a reversal bar that came right down into a support level as well, and is rebounding. They are set to open higher this morning, so money's starting to flow into this defensive sector, and that is a good sign that the stock market itself is actually in the late stages. When gold miners are outperforming, we can get a little bit of an insight that the stock market is at the late stages of a major bull market, and same with gold, when gold's doing the same. If we take a look at oil definitely threatening a breakdown yesterday. When we zoomed out on this chart, we talked about this critical support level that is trying to hold here. If we go way back in time, we've got a very critical pivot point. You're either stuck below it or you're stuck above it. And so it is just kind of flirting with it. Now, there is no perfect number saying, hey, if it closes below this, it's all hell breaks loose and the bottom's falling out. It can pierce through it, as you can see here. This is a long pattern. It's probably better to look at it almost from like a weekly standpoint. Then you get bigger bars, more significant lines, and we could come down to these lows here, this wick low, or however. Obviously, there's a few different layers in here, but we are getting very close to oil breaking down, which I think will send the energy stocks tumbling. They did have a pretty good pullback, like 3.5% the other day. Just on the weekly chart alone, we've already seen them just this week. They're down about 5%. They were down quite a bit more than that at one point, 8%, but they had a bit of a bounce there yesterday. Again, I think the energy sector space could get hit very, very hard. There's all kinds of lows layered through here where the stops get run. And I think this could be one of the hardest hit sectors first. If we have a bad piece of economic data, if oil breaks down, either or both, I think we start to see the longs get spooked and stops trigger, and we can see a very big wipeout here. I think ERY. We're not looking to short this, but I'll share with you guys. ERY. This is a 2x inverse. So this is the inverse of XLE pretty much, and more or less it has potential here to start that breakdown. And this is that energy space going up, but this is an inverse, so it's going down. But once it turns, it can really spike and take off. So it could become a really interesting opportunity. You can see here on the, let's just go over here. If we look at the 30-minute chart, it was really noisy, kind of more so a bearish type of price action. It pops and then fades, pops and then fades. Not the most ideal sign. Now we've seen kind of this base, you could say here on the 30-minute chart, a little bit of a rounding base. It kind of rallied up, built a bull flag, rallied up, having a quick pullback after this was a pretty strong impulse move, quick pullback to support. Now it's rallied up and put in a bit of a bull flag. So on a short-term basis, ERY has a tight bull flag that could actually point to a pretty good pop to the upside. Let's just do a Fibonacci out of curiosity, and let's just make this a little bigger. Let's see if we can get out of here. So let's see what the upside here, based on this pattern. There's two levels we could go from. Get rid of this. It's the most conservative one at this point. That would be potentially where it closed yesterday. About an 8% move to the upside. Now, if this whole rally actually started over here, way down, we could pick one of these. This is the more conservative one versus this low. If we go from here, that will indicate where that next upside target is as well, which is obviously The 618, as you notice with this ticker here, the 618 based on this pattern is is almost the same as the 100% move of this Fibonacci. So this is definitely 27, 2650 or 27 area is definitely first target area. Second target, reaching for the sky here, is about 13% to the upside, which is 2840, somewhere in there. It'd be interesting to see where price came back to that. There is a significant high much below that, so this is definitely a critical level. If you don't take profits there, it could reverse and come right back down. Anyway, it's an interesting kind of setup. It's not quite, I mean, obviously on a 30-minute chart, if you're a momentum trader, it looks like an interesting play. You will have to hold a position over the weekend, which there's all kinds of Trump news and all kinds of Canadian news. Man, all these politicians are pretty ridiculous. But anyway, not much we can do about it other than move around with their song and dance and how they shake the markets up and go from there. If we take a look at the hot list, I did put gold on here. Gold does come to the top of the list. In fact, it's out of all the sectors that we track, when you look at gold, it's the only one that is risk on. People are willing to risk their large amounts of money and put it into this sector. The short-term trend is up and the long-term trend is up. So really, it is the only one that is kind of doing the opposite of everything else. And so that's, and of course, we're looking at a bit higher in gold. I just showed 3,050, 3,060. If gold hits that, then if you're in like a GLD or gold, then you would exit or potentially trim profits from there. Other than that, I think that's about it. When we look at the long-term picture of the chart, we are coming down to this, what is this? This is the 43 period moving average, which is roughly the 200-day, and we're tagging this level. This topping phase feels very similar to this topping phase. Last time we hit the 200-day, it did have a washout rebound, and then eventually the trend changed. It still took several more weeks, but the momentum really stalled. So the question is, do we rebound here and hold and retain this, or do we do a technical breakdown and start to trade lower and have the moving average flatline and we really just lose that upward momentum? We start to go sideways or down on average. So that's the big question. Anyways, that's it for today. I think let's take a look over at Bitcoin just because some people want to see it. Bitcoin, volatile. I covered Bitcoin in detail yesterday. It's had the breakdown and bounce up on news with Trump and all that stuff. I think the other thing here, if we look at the mags, let's look at the Magnificent Seven and just kind of focus on it. You can see it is pulling back to the, I'm going to go back to the daily chart. Sorry guys, I was on the weekly there for the last couple charts. Here we are with the mags. It has definitely done some serious damage, lots of elevated volume, and it's in a downtrend. It's showing volatility. It's got big pops and drops back and forth. That's usually the sign that we're getting closer to a bottom. But keep in mind, some of the biggest moves in the market happen right before a trend changes, just like this. You'll be like, oh, the market's about to bottom, or we're like, oh, this is an exhaustion gap, and then you have this massive move or this huge move here. Some of the biggest moves happen right at the end of a trend, and it's the same with the upside. When you have a blow-off phase, you have some of these big straight-up bars, and then they get wiped out, and then the market has a wipeout. So tops and bottoms, right when you're trying to pick that top or bottom, is usually you get in, and then it goes really far against you. And so this could still have like some huge red bar or big gap down and then put in a bottom. So it's not about, if you try to pick bottoms and tops, you probably have suffered those plays very often. Let's take a look at Nvidia real quick here. Nvidia looking pretty weak. It has a series of lower highs, lower lows. It's pierced this low. Again, I think this market is more or so primed and ready for a bounce. But over on the daily chart, it's ready for a bounce. So I think pretty much if the stock market bounces, most of these stocks are all going to bounce together. Next week is going to be very interesting. Let's see where we close today. Either it's going to be a sharp rebound, I think, and short covering into the close, or it's going to be everybody saying, just get me out. This trend is down, which I almost feel like is going to happen. It's going to be very red and a big sell-off today. And then Monday could be a big gap open to the downside. with final people saying, whoa, last week was brutal, get me out. And they all exit on Monday at the open for a big gap down. And then the market rallies. That gap down on Monday could be an exhaustion low. So we'll just see how that unfolds. Again, we're on the sidelines for the short-term strategy. For our long-term investing strategy, we're still long, and we just have to let it move and breathe and wiggle through this uptrend. Bull markets do have sharp pullbacks percentage-wise, but you do have to ride those out. But short-term trading, we are on the sidelines waiting for a new trigger to go forward. Anyways, that's it for now. Talk to you soon. Bye-bye.